Okay, so let's start. We want to start a new topic. And our new topic is called non-profit making organizations. Which kind of organizations are these? There are some organizations which their aim is not to make a profit, but to provide a service to their members. That kind of an organization, or those kind of organizations which are there to provide a service to their members, we refer to them as non-profit making organizations. For example, you may have a sports club that is not there to make profit, it's just there to provide service to their club members. A church, a school, these are organizations that are there to provide service to their members. So we want to find out, how do they maintain their accounts and which records do they keep? So we have said these are organizations which are there to provide a service. Now, two of the main accounts that they normally keep, or two of the final accounts that they normally prepare, is one of the final accounts that they normally prepare at the end of the year is called an income and expenditure account. An income and expenditure account. While in a business we call it income statement or profit or loss statement, for them they would call it income and expenditure account. For a normal business, you call your difference between your incomes and expenses, you call it net profit. For them, the difference between the incomes and the expenditures, we normally refer to it as either what we call a surplus or a deficit. We call it either surplus or a deficit. That's how we do it. We shall talk about it in details. Number two, the other final account that they normally keep is an account of the balance sheet, or what you can call statement of financial position. We call it statement of financial position. Now listen, again, this balance sheet or statement of financial position is the same like the way you know it. For example, like it is almost the same like that of a company, again like that of a sole trader or a partnership. The only difference again in the balance sheet is the section called financed by. Listen, is the section called financed by. For non-profit making organization, they don't have capital. Instead, for their capital, they would call it accumulated fund. For the capital of non-profit making, they call it accumulated fund. I told you their profit is called what? Surplus. Their loss is called what? Deficit in the income statement or in the statement of income and expenditure. Now, meaning in the balance sheet or in the statement of financial position, where you normally have financed by, you will now start with what you call accumulated fund. Then you add what we are calling the surplus. The way you normally add net profit in a sole trader, this time you will add either a surplus, or if it was a loss, which is a deficit, you minus that deficit. So that's the only difference in the balance sheet or in the statement of financial position. Good. Now we move on further and ask ourselves, these guys, they are not there for trading. So what is their main source of income? Where do they get their income from? This sports club, these churches, these public sector schools, public schools, where do they get their financing? And other non-profit making organizations, where do they get their source of income? That's what I want to talk about now. What we are calling sources of income. But before we come to that source of income, maybe we could put down something on what we have already said. Let's put down something on what we have already said. So the topic is non-profit making organization. The statement or the topic is non-profit making organization. So put it down, non-profit making organization. Then you say this. After you're through with the writing of the topic, non-profit making organizations, then you say this. These are organizations which exist. These are organizations which exist to provide a service to their members. These are organizations which exist to provide a service to their members or to the public. These are organizations which exist to provide a service to their members or to the public. But, continue, to the public, but not with an aim of making profit. But not with an aim of making profit. But not with an aim of making profit. Another continue. Examples include sports club, churches, public schools. We are saying examples include sports club, churches, public schools, and other non-governmental organizations. Non-governmental organizations. That's what you can call the NGOs and other non-governmental organizations. Another paragraph. The following are the final accounts that are maintained. The following are the final accounts that are maintained by a non-profit making organizations. The following are examples, as the following are final accounts that are maintained by a non-profit making organization. 1. Income and expenditure account. Income and expenditure account. Number 2, statement of financial position. Number 2, statement of financial position. Statement of financial position. Good. Now let me discuss the source of income now. Let me discuss the sources of income. One major source of income, let us use a sports club, for example. One major source of income, don't write, let me first discuss them, is what we call members' subscriptions. Members' subscriptions. They are members, when you have a sports club, members would normally pay the subscriptions every year. Members' subscriptions. Members' subscriptions. That's one of the sources of income, and it's the main one. Source of income for non-profit making organizations like sports club. Now, just like you know, and we have done this before, that when you are doing an income statement for a profit-making organization, you remember we said you recognize costs when they are incurred, but not when money is paid. You recognize revenue when it is earned, but not when money is received. So we were using a concept called accrual concept. The same thing again. In your income and expenditure account, you will take one source of income as member subscriptions. Members' subscription as one source of income. But is it the actual amount you received during the year? No. It is again, just like we were doing in a normal income statement of a business, it is what am I supposed to receive? That's what I take to the income statement. what are we supposed to receive? So to determine the income for the year, we shall be preparing an account called member subscription. We want to determine the income for the year, member subscription. How much are we supposed to receive? Not what we have received, no. So let us assume that by the beginning of this year, there are some members who had not paid their subscriptions for last year. In other words, by end of last year, there are members who had not paid their subscriptions. So which means those subscriptions are still owing. We are still demanding from them. Those subscriptions are still in arrears. So to us as an organization, is that an asset or is that a liability? We have members who had not paid their subscriptions last year. Come this year, we are still demanding from them their subscriptions for last year. So we are beginning the year with some amount we are demanding from members from last year's records. Okay? That is what you call subscriptions in arrears. We also call them subscriptions owing. That is an asset. Okay? That's an asset. We are demanding from them by the beginning. So any subscriptions in arrears, arrears brought down, that is an asset. I do hope you remember, even when we were dealing with ND adjustments, we were saying any asset by the beginning, just debit. It is the one that you are carrying down that you should be very careful. Good. So some members had not paid us part of their subscriptions last year. What about, listen, some members also, others, were supposed to pay me 5,000 for last year. Some members were supposed to pay me subscriptions for last year, 5,000, but last year they paid 10,000, which means some members even paid for this year or for future. So if by the beginning of this year, there is an amount you have received in advance from some members, a member who could have overpaid you last year, remember, he can come back to the club and say, I am not going to use your services this year, bring back my money. That automatically means, as a club, you owe that member. So we normally call such subscriptions, we call them subscriptions in advance. So if there is any subscriptions in advance, that is a liability by the beginning. Because a member can come back and demand for it and say, I'm not going to use my services this year. Yet I had paid for this year, but I'm not going to use the services this year. Bring back my money. So as an organization, we owe that member. So any in advance balance is a liability. You bring it down by the beginning of the year. So just like expenses, I hope you still remember, we were saying if an expense has been prepaid, that was an asset, you bring it down. If an expense has been owing, you bring it down by the beginning. Just like we were discussing again, something like rent income. You remember, it was an income. And we were saying if you have rent income owing, that's an asset. Rent income owing, meaning some tenant had not paid you. You remember we were bringing it down as an asset. It's the same thing here. We are saying there are some members who have not paid us. So there are some subscriptions which are still owing. Bring them down by the beginning. If there are some members who had overpaid you last year, then by end of last year, you had a liability to them. You owed them that much, which automatically means by the beginning of this year, you still owe them. Whatever it is. Good. Now listen. During the year, you received subscriptions for the current year. Okay? During the year, you received subscriptions for the current year. So you must have debited bank. You must have credited the account called subscriptions. You know the rule says when an income increases, what do? You credit. That's the rule of income. We are receiving subscriptions this year. Cash will increase. The rule says you debit cash because cash is increasing. Our income called subscription will increase. The rule says you credit. Good. So whatever we are receiving this year for subscriptions, you debit. Are you there? Good. It may be possible, listen carefully, it may be possible that some members demanded a refund. Maybe they overpaid and they demanded a refund from the club. We have received it, but we know they overpaid. So they say, refund my money. So if there's any subscriptions that we refunded to members, remember it was part of the cash that we received. But for whatever reason, the member decides he's no longer going to be a club member this year. Yet he had paid. He had paid for the club usage this year. For whatever reason, he's not able to utilize the facility. So it tells me or tells us to refund that subscription. So we shall refund. It is obvious, whatever you are refunding to the members, you debit. You come and say a refund to members. Refund to members, whatever it is. Good. That is it. Then, now listen. Sometimes a question tells you, like for example, by end of the last year, listen, by end of last year, we had some people owing us 2,000. 2,000. Let me use that as an illustration. During the year, let us assume our current year is 2020. During the year 2020, listen, let me change something here. During the year 2020, we received an amount of, listen, we received an amount of subscriptions worth 25,000. This 25,000 we received this year, part of it, let me assume some 1,500 was for 2019, which automatically means the other balance of 23,500 is for the current year. So I'm assuming that is cash, no, 2019. We received cash for 2019 this year, 1,500. For 2020, we received 23,500. So in total, we received how much? 25. Now, I want you to listen carefully because there's something I want to bring in here. You may have a policy as a company or, as an organization. Any subscriptions that are owing for more than a year, any subscriptions that are owing for more than a year should be written off. Any subscriptions that are owing for more than a year should be written off. I want you to follow keenly. Last year, members had not paid us how much? 2,000. That's what we began with here. That was for which year? 2019. When it came to this year, 2020, we received 25,000 shillings, out of which 1,500 is from the people who owed us last year. So automatically it means there is part of 2,000, listen, there is part of 2,000 which even by end of this year 2020, we shall not receive it. Remember, 2,000 is not for the current year. It's not for the year 2020. It was for the year 2019. We were demanding from members last year 2,000. Come this year, we began with that amount of demand. This year, only 1,500 of that has paid. So it means there's another 500 for last year, which will be carried into the next year. That will affect 3 years now, because it's for last year, this year, next year. Now, out of 2,000, if we have only received 1,500, then it means the other 500 will still be in arrears for more than a year. That's why I'm saying some questions tell you any subscriptions owing for more than a year should be written off. That could be a policy. Some questions tell you that any subscriptions owing for more than a year should be written off. So it means out of this 2,000, for 2019, we are in 2020. Out of this 2,000 for 2019, in the year 2020, we have only received 1,500. So there is another 500 from last year, which will still be owing for the whole of this year. It will still be owing as 500 even up to the end of the year. It's more than a year now. That 500, if you are told by the question to write it off, so we are writing out from how much? From the 2,000. Remember, out of the 2,000, we have received 1,500. So there is another 5, we have not received it. So in other words, we are saying any subscriptions written off. Subscriptions written off. That should be credited, which in our case here, it will be 500 for purpose of illustration. Out of the 2,000 on the credit, on the debit, we have received 15. The other 15, we have not received it. It's still owing for more than a year. So we write it off if that is the policy. Most questions sometimes talk about that way. But the point is this for now, because we are not using some figures, we are just saying, I was just trying to illustrate how to prepare this account, where I was saying you bring down the balance by the beginning, bring down the balance by the beginning also for the any liability by the beginning, then whatever we are receiving this year, you bring it here. Listen carefully. Then, if there is any subscriptions written off, some books will call them bad debts written off, write it off, whatever it is. We were assuming 500, but it can be any amount. Now listen. Then again, by end of this year, if there are any subscriptions that are still owing, some members have not paid us by end of this year, some members have not paid us by end of this year, then we are still demanding from them. It's an asset. Any subscriptions owing by the end of this year is still an asset to us. So I told you, listen, I told you an asset by the end of the year should appear as a brought down on the debit side. We have always been saying that. But you cannot have a brought down on the debit side without a carry down. So any in arrears by end of the year, that amount should be carried down on the credit side. In arrears carried down. Arrears carried down. Are you there? Or arrears owing, whatever it is. Arrears carried down. That should be on that side. Don't panic. We shall do an example. It will become clear. Then again, if there is any amount we have received in advance, if there is any amount we have received this year or next year, now we have received it in 2020, but it's maybe for 2021. I'm assuming my current year is 2020. So it means what? It means that we have received more than enough. That more extra we have received this year is a liability. Are you there? A liability by the end of the year, we have always said it's a credit balance. A liability is a credit balance. But again, just like the many other accounts we have discussed, you cannot have a brought down on the credit side without a carry down. So if there is any in advance carry down, that should be carried down on this side. In advance, carried down. That is carried down, not brought down, but carried down. In advance, carried down. So that when you bring it down, it will be reflected as a liability. Are you there? Good. Now listen. Once you enter all the information concerning your subscriptions account, there will be a balancing figure. Listen, there will be a balancing figure, and that balancing figure will be the amount of the income for the year. Normally, it will be on this side. That's what you're now going to take to the income and expenditure account. That amount is what you're going to take there, and we are saying we are getting it as a balancing figure. That's what we take to the income and expenditure as our subscription income for the year. So it's an important account to remember on how to prepare it, because this is the main source of income for non-profit making organizations subscriptions. I have said, start with the position by the beginning. If it's an asset by the beginning, just debit. In terms of subscriptions, what would it be called? It will be called subscriptions owing or subscriptions in arrears. Because it's an amount of income. Income is owing or in arrears to us. Bring it down. That's what I started with here. That's what I brought down on the debit side. Then I told you, if it's an income subscriptions received in advance by the beginning of the year, it means we owe the members. They have overpaid. Last year, 2019, they had overpaid. So we were carrying down a liability by end of last year, which we have to bring down by the beginning, because they can demand from it. They can demand it anytime. Good. So we have said, just like any other income, any asset you debit, any liability you credit by the beginning. Then go find out from the question, how much is the subscriptions we received this year? We normally debit cash, which means automatically you credit this account we are calling subscription account by whatever you are receiving. You debit cash. This is cash received. You debit cash, you credit subscription account. Then I've told you, if out of what you have received, there are some members who are demanding a refund because they are going to discontinue being members of this club. Yet they had paid for this year, but they are going to discontinue. So you may have a policy of refunding. So if you refund anything out of the cash received, you debit. That's what we are saying. Okay? Then I've told you, if there are some subscriptions that are to be written off as bad debts, you will read the question. Maybe you will be told, like I was trying to explain, that the amount owing by the beginning was 2,000. Out of the 2,000, we received only 1,500. Out of that 2,000, we received 1,500, meaning that there was an extra 500, which is still owing for more than a year. And some questions tell you subscriptions owing for more than a year should be written off as a loss. So that is what we are saying. You credit. Then you carry down the balances by the end of the year. You carry down the balances by the end of the year. Now, if it's a liability by the end of the year, I have told you, meaning you received a subscriptions in advance, that's a liability. That liability by the end of the year should appear as a credit balance. But you cannot have a credit balance brought down without a carry down. That's why we have said you first carry it down on the debit side. If there are subscriptions that are still in arrears or owing, members have not paid, that's an asset to us. We are demanding from them. That's an asset to us. That means an asset is a debit balance. Being a debit balance, we are saying as a brought down. But you cannot have a brought down by the end of the year without a carry down. That's what we are saying, you carry down. Then once you feed in all the information, I have said the balancing figure will be the income for the year or subscriptions. I told you it's always on the debit side as a balancing figure. That's what you take to your income and expenditure account. We don't call it profit or loss. We call it income and expenditure account. Good. So before we go to the second source of income, let's put down what we have already said. So Andika, another subheading, sources of income. As a subheading, sources of income. Sources of income. Number one, members subscriptions. Number one, members subscriptions. Members subscriptions. Below that you say this. Below that you say this. These are annual subscriptions, contributions, put it that way. These are annual contributions. These are annual contributions by members. These are annual contributions by members. Another paragraph. Any subscriptions received from members, should be credited. Any subscriptions received from members should be credited in the subscriptions account. We have said, any subscriptions received from members should be credited in the subscriptions account. In the subscriptions account. In the subscriptions account. In the subscriptions account. Another paragraph. Subscriptions received in advance. Subscriptions received in advance. Subscriptions received in advance should be considered. Subscriptions received in advance should be considered as a current liability. Subscriptions received in advance should be considered as a current liability. Another paragraph. Subscriptions that are still in arrears. Subscriptions that are still in arrears should be considered. Subscriptions that are still in arrears should be considered as an asset. As an asset. Another paragraph. The following is the format. The following is the format of the subscriptions account. The following is the format of the subscriptions account which is used. The following is the format of a subscriptions account which is used to determine. The income for the year. Which is used to determine the income for the year. So you can now copy this. There is nothing I'm going to change here. Just open an account called subscriptions account. Open an account called subscriptions account. Good. On the debit side, we have said arrears brought down. Refund to members. I'm reading the items on the debit. Income and expenditure account as a balancing figure. Then the last one down there is in advance, carry down. This is in advance, carry down. In advance, carried down. That is items on the debit. Arrears brought down, refund to members, income and expenditure as a balancing figure, because that one you have to calculate it. Then you have in advance, carry down. Then on the credit side, I am reading them. in advance brought down. Then you have cash received, subscriptions written off. This is subscriptions written off. Subscriptions written off. Whatever it is, some questions will call it bad debts. Then you have arrears carried down. Arrears carried down. Good. That's one source of income. So finish. I discussed the second one. I want to discuss another source of income for non-profit making organizations now. But otherwise, that's the major one. In any question, you will always get subscriptions. So finish. I want to discuss the second one now. I want to discuss the second one if you are through. Finished. Finish. I discussed the second source of income for non-profit making. Okay, I hope you are through. Okay. Good. So that's number one source of income for non-profit making organizations. That is subscriptions. Very technical account to determine or to be used. The second source of income is what we call donations. Let me explain it. Of course, as a non-profit making organization, you can receive donations from well-wishers. Now, there are two types of donations. We call them one, either a specific donation, or we normally call them general donations. Now, if you receive, maybe you're a sports club, and somebody or a government or whoever gives you some donations and tells you, use this money to buy a bus for the club, or use this money to buy land for the club, use this money to build a stadium, use this money to buy land or build whatever, a building. That kind is a specific donation. The person who has given you this money has specified how it will be utilized. That's a specific donation. If the person giving you the donation just tells you, use this money to meet the general running expenses of your club, paying the workers who clean the club, who sweeps the club, who cut grass there, and so on. That kind of a donation is a general donation. Now listen, how then do you treat these donations when it comes to the accounts? When you receive a specific donation, listen, as a non-profit making organization, you don't take it to your income and expenditure account. No. Don't take it to the income and expenditure. In other words, it's like we are saying, don't take it to your income statement. No. It is for specific purpose. Don't forget, in the normal income and expenditure or in the normal income statement, we normally show the expenses that are incurred in the running of the business and the revenue. In the running of the business, what is the revenue are we generating? So if you are receiving a specific donation, that should not go to the income statement because it's not for the normal running expenses of the business. No. So what you do, you take that kind of a donation to a specific fund account. If it's to buy a bus, you will open a bus fund account. you will debit bank because you are receiving the money. You will debit bank and you will credit that fund account. Then at the end of the year, if you have not utilized the money, it will now go to your balance sheet. Listen, it will now go to your balance sheet as part of finances. That means you are being funded. So that specific donation should not go to the income statement for a normal business, or in other words, for this kind of a business or this kind of organization, it should not go to the income. It should not go to the income and expenditure. Income and expenditure is for the normal running expenses of the business. How much incomes have we received from members during the year so that we give them the service this year and so on. That's the income and expenditure. It's the same as the income statement. Are you there? But listen now, if you received a general donation for the normal running of your business to meet the general running expenses of the business, then you take it to the income and expenditure. So this one will go to the income and expenditure account as the normal income. So among your incomes, when you are quoting the incomes, let me explain in the general way we prepare an income and expenditure this way. Income and expenditure account looks like this. Income and expenditure. We normally identify our incomes, whatever they are. Get the totals. Then you less all the expenditures for the year. What are the kind of expenditure for a club? Electricity, water, salary, and so on. Get the net. That difference is what I'm calling either a surplus or a deficit. If the incomes are more than the expenditures, we call it what? A surplus. So this is generally how we prepare an income and expenditure. So one of the source of income is the subscriptions. Here, which I have told you, you have determined it from the subscriptions account. Okay? For the year. What is the subscription for the year? Good. Then I'm now saying another source of income is donation. Which kind of donation? General donations. So that you use it to meet these expenditures or the expenses of the business, of the organization. Otherwise, if you are receiving a specific donation, it is not to meet these expenditures or these expenses. No. I have said, now take it to a specific fund account where the money will be kept in a fund account until when the money will be utilized to do whatever specific item. If it is to buy a bus or to buy a motor vehicle or to buy land for the club and so on. That's number 2. I've explained what are the types of donations and how to treat them. Before we go to number 3, let's put down that number 2. Andika number 2, donations. Donations. Then you say this. This is an amount received. Donation. This is an amount received from the well-wishers. This is an amount received from the well-wishers. We stop. Another paragraph. Donations may either be, put it that way, donations may be either specific donations or general donations. Donations may be either specific donations or general donations. Another paragraph. A specific donation or specific donations, put it that way, specific donations are donations, specific donations are donations whose purpose is defined. Specific donations are donations whose purpose is defined by the donor, whose purpose is defined by the donor, e.g., to construct a church, e.g., to construct a church, or a clubhouse, or to purchase a motor vehicle, etc., or to purchase a motor vehicle, etc. Okay, next, another paragraph. General donations are those donations whose purpose is not specified, whose purpose is not defined. You can put it that way. General donations are those donations whose purpose is not defined. Whose purpose is not defined. Continue. They are used to meet the general running expenses of the organizations. They are used to meet the general running expenses of the organizations. They are used to meet the general running expenses of the organization. Another paragraph, you can say NB, note. NB, note. Specific donations are not transferred. Specific donations are not transferred to the income and expenditure account. Specific donations are not transferred to the income and expenditure account, comma, but they are transferred to a specific fund account. But they are transferred to a specific fund account from which they are transferred to a specific fund account from which funds will be drawn, when the specific objective is met. From which funds will be drawn when the specific objective is met. When the specific objective is met. When the specific objective is met. Okay. Next, another paragraph. For general donations, they should be credited. They should be credited in the income and expenditure account. Should be credited in the income and expenditure account as an income. It should be credited in the income and expenditure account as an income. As an income. As an income. Good. So far, I hope so good. We have said one source of major income for these clubs is what? Subscriptions. How do you get it? You prepare a subscriptions account. Another source of income is what? Donations. Which kind of donations? Either specific or general. How to treat them, you now know. Specific, don't consider it as an income in the income and expenditure. No. Take it to a fund account. General donations, take it as an income in the income and expenditure account. Let's discuss the third type of source of income for them, and that's what we call life membership fee. Life membership fee. Life membership fee, or what you can call life membership fund. life membership fee or fund. Let me explain it. There are some clubs that tell their members this: give us 200,000, and once you pay that 200,000, that will cover you for 50 years or 20 years in the club. So it's not like the contributions, the subscriptions, which you pay yearly. So we are saying, either you agree with your club that if you pay us 200,000, you will be a member for life, or it will be a member for a long period of time, maybe 20 years, 10 years, and so on. So you don't have to keep paying. No. Now listen. Suppose your club decides that if a member pays them 200,000, that will cover them for 20 years. That will cover them for 20 years. We are in the year 2020. So this year, in the year 2020, we received 200,000. Will you take all of that 200,000 as the income for the 20-year 20? No. Again, remember, this will be income to be recognized in the next 20 years. So what you will do, you will create a life membership fund account. You will have what we are calling a life membership, listen, fund account, life membership, fund account. You are receiving 200,000. Money in the bank is increasing. So you will obviously debit bank and you will credit this account. And you come and see a bank or cash, 200,000. But listen, this is for the next 20 years. So what should be the rightful income for the club per year? What should be the rightful income for the club per year? And maybe before we even go further, listen, means this income and expenditure, I've prepared it in a vertical form. Listen, this income and expenditure, I've prepared it in a vertical form. But you can still prepare our income and expenditure in a T format. Income and expenditure, where on the credit side you recognize the incomes. That's why you have heard me saying credited. And on the debit side you have the expenditures. Then you compare the incomes on the credit and the debit expenditures. You have a difference, maybe a surplus. If the incomes are more than the expenditures, you have a surplus. If the expenditures are more than the incomes, you have a deficit. So even this income and expenditure account can be prepared in a T format, where I'm saying on the credit, you look at what are the incomes, the subscriptions, donations, what are the expenditures, electricity, water, telephone, salaries, and so on. So you can prepare an income and expenditure either in a T format or in a vertical format. We were showing it in the first place in a vertical format or in a statement format. But now I'm saying here, listen, from this fund account, we have received 200,000. We need to be transferring part of it every year to the income and expenditure. Part of it every year to the income. How much have the club earned? We have not earned 200 million, 200,000. No. That one we shall earn it over the next 20 years. So every year we should recognize how much. In other words, this member should have paid how much every year? If we have received 200,000 and it is to cover you for 20 years, then it means every year you are supposed to pay 10,000. So what we shall be doing every year, I hope you are listening, what we shall be doing every year, we shall be transferring from this life membership to the income and expenditure account the amount that we have earned for the year. So this year, to the income and expenditure account, it will be 10,000. Because 200,000 divided by 20 years, That gives me 10,000. That is my rightful income for the year. Then the balance we are carrying down, listen, 190, that balance is what I owe as a club. We owe it to the members. Because a member can come and say, I'm not going to stay in your club for the next 19 years. Refund my 190. So you need to refund to them their 190. Okay? Good. Now listen. Again, balance brought down by the beginning of the second year will be 190. Then in the second year, again, you transfer another how much? In the second year again, we still have a liability. We still owe our members. By end of year one, we owe them 190. It's a liability. Because they can ask for a refund. Which means by the beginning of year two, we owe them 190. Then we give them service for that year. So we recognize how much again from that income or from that membership account, another 10,000. I hope you are following. We take it where? To the profit and loss, which is the income and expenditure, another 10,000. So it means, therefore, among your incomes and expenditures here, you will have life membership of how much? 10,000. If you are doing it in a T format, you are crediting the income and expenditure account, which is the same as here. You come and bring here life membership. Life membership, 10,000. The other 190, by end of year one, you will consider it as a liability. You will consider it as a liability. I hope you have understood what we do for life membership fund. A member paying a lump sum amount to cover him for a specific period of time, a long period of time. So we are saying every year you'll be transferring from the life account to the income and expenditure, whatever it is that you are transferring. From my illustration, I'm assuming that the question tells us this 200,000 we are receiving is to cover us for 20 years. If it's to cover us for 20 years, then it means every year we should recognize 10,000. So we need to recognize an income of 10,000, take it from the life membership fund account, take it to the income and expenditure by debiting the life membership and crediting the the income and expenditure account. That's another source of income for the club. What is it? Life membership. And I've told you this is an amount you are receiving, but to cover a long period of time. Therefore, for that amount, you spread it. For that amount, you spread it over that period of time. So let's put it down as number 3 now. Let's put it down as number 3. Sema hivi. Life membership fund or life membership fees. That's our number 3. Life membership fees or fund. Life membership fee or fund. Then you say this. This is an amount. This is an amount received from members. This is an amount received from members. This is an amount received from members who intend to enjoy the services, of a club, who intend to enjoy the services of a club for a long period of time. For a long period of time, or for the rest of their life. For a long period of time, or for the rest of their lives. Full stop. Then you go on by saying, another paragraph, the whole amount should not be recognized as an income in the income and expenditure account. The whole amount should not be recognized as an income in the income and expenditure account. Full stop. Go on. Go on. The amount to be recognized as an income, the amount to be recognized as an income should be transferred. The amount to be recognized as an income should be transferred from the life membership fund account, should be transferred from the life membership fund account to the income and expenditure account. From the life membership fund account to the income and expenditure account. The income and expenditure account at the end of each year. At the end of each year. At the end of each year. Another paragraph. The balance of the life membership fund, the balance of the life membership fund account, the balance of the life membership fund account should be considered as a liability. The balance of the life membership fund account should be considered as a liability. Good. Maybe for the sake of remembering, just come and show something like this. Just show like you're preparing this account. Come and see your life membership fund account. Then you come and see here, maybe year one, whichever the year, cash. Whatever it is, cash received. Maybe you can put it that way. This is cash received. Whatever it is that you have received. Then from there, we have said you transfer by end of every year, year one or year one, to the income and expenditure account, whatever it is that you are transferring. Then you carry down the balance by end of year one. Then you come and close the first year, bring it down by the beginning of year two. This is year two, balance brought down. Then again, maybe by end of year two, you transfer another 10,000, whatever it is that you will find out from the question. Year two, to the income and expenditure account, how much is it? Whatever it is, then you keep carrying down. That's how we deal with the life membership account. So I'm through with the third source of income for non-profit making organizations. The first one and the major one, subscriptions. 2, donations. 3, life membership. So finish. I want to go to the number 4. I want to go to number 4 now. Another source of income for non-profit making organizations like clubs. Okay, let me explain it now. If you are through with the copying, let me explain it. If you are through with the copying, listen now. Now, before I give it out, or before I explain what it is, let us assume you are a sports club. That is the non-profit making organization you are running for your members. Now, these members may need, after coming to the sports club, they may need to relax and take some sodas take beer, eat food, and so as a club, listen to this, as a club, you may have either a canteen or a restaurant or a hotel. So, though you are not running this to make profit, but you may be forced to undertake a trading activity, like having a canteen where you sell them sodas, snacks, water, and so on. That canteen will make the normal profit like any other business. But we are saying the aim was not to make profit, but you are doing a trading activity. Listen to this now. Or you are running a hotel or a restaurant. From the restaurant, we shall make profit because their sales as normal, their normal purchases, their normal sales, their expenses like electricity of that canteen or the restaurant, normal. Now, listen. If as a non-profit making organization, you undertake a trading activity, then you are required to prepare the normal income statement. The normal income statement, or what you can call statement of profit or loss. Get the profit from there. Listen, whatever is the profit from that trading activity, now it will go to the income and expenditure account. Meaning, you could be making profit from the bar or from the restaurant, whatever it is. So that profit we are making from the restaurant will be part of the profit here, will be part of the income. We come and see a net profit from bar. Maybe you are running a bar or a restaurant. So it will be an income, one of the source of income for this activity. If we are doing it in a vertical form, we are saying it will be here, net profit from bar. So for this one, listen, you prepare the normal income statement or the normal profit and loss statement, where you take the sales, you minus cost of sales, get the GP, minus the expenses relating to the bar or relating to the hotel or relating to the restaurant. Are you there? Good. So that's another trade, another source of income for the club from the trading activities like running a hotel or running a club, a hotel, or a restaurant or a canteen for the members. So from there we shall get some profit. That profit becomes an income to the club. Okay, so let's put it down as number 4 now, as another source of income. Number 4, call it this way: profit from trading activities. Profit from trading activities. Profit from trading activities. Profit from trading activities. Then you say this. Then you say this under that. For any trading activity, carried out, or any trading activity carried out by the non-profit making organization, for any trading activity carried out by a non-profit making organization, comma, the income and income statement, or put it this way, a statement of profit or loss, we are saying from for any trading activities carried out by a non-profit making organization, comma, a statement of profit or loss should be prepared. A statement of profit or loss should be prepared to determine. A statement of profit or loss should be prepared to determine the profit or loss from such activity. From such activity. From such activity. Then you say this: the net profit the net profit from such activity, from such trading activity, the net profit from such trading activity should be considered as an income. Should be considered as an income of the organization. Should be considered as an income of the organization. Another paragraph. Trading activities may include operating a bar or a restaurant, or a canteen. Trading activities may include operating a bar or a restaurant or a canteen. Good. That's number 3. Finish. We want to go to number 4 now, as another source of income. We want to go to number 5, as another source of income for this non-profit making. Where do they get their money from? Number 5, let me explain. As an organization, listen, as an organization, you can still buy shares in a company somewhere. That does not stop you from investing. As a club, you may decide, let's invest some money in some shares somewhere. Or we buy a building which will give us rental income. So we are saying another source of income could be incomes from investments. This is incomes from investment. Incomes from investments. That's another source of income. So we'll put it down. Incomes from investments, e.g. incomes from investments, e.g. dividend received or interest received. Dividend received or interest received. Dividend received or interest received. So if you put money in a fixed deposit somewhere, you are investing. You are going to earn interest. If you bought some shares, you're going to receive dividends. That's an income. Good. So that's another source of income. Number 6. Let me explain another one. If you are through with number 5. Number 6. Listen. As a non-profit making organization, you can organize what we call raffle tickets. People buy a ticket, then you raffle, somebody will win something, and so on. From the money you are receiving from the sale of raffle tickets, that is a source of income also. You can organize such activities where you sell raffle tickets, people will win, others will lose. Whoever wins takes whatever he wins, but you are selling or trying to generate revenue from the members. So put it down, number 6, profit from social activities. Profit from social activities or events. Profit from social activities or events, e.g. sale of raffle tickets. Sale of raffle tickets. Sale of raffle tickets. Sale of raffle tickets. So if you sell raffle tickets to your members, that's a source of income also to the club. Okay, good. So that brings me to the end of that introduction. How to deal or to prepare the financial statements of a non-profit making organization. We have said there are how many financial statements? 2. One is the income and expenditure, and the other one is the statement of financial position. Starting with the statement of financial position, I've said there is no difference between the one you know and theirs. The only difference is in the section called financed by, where I told you under that section called financed by, now you will have not capital. Don't add net profit. You have capital, add any surplus. If it's a loss that your organization made, we call it deficit. You minus the deficit. So the balance sheet is the normal way we know it. But when it comes to income and expenditure, we have looked at what are the sources of incomes for non-profit making organizations. We have discussed the first and the major one is subscriptions from members. I've discussed in detail how to prepare and to determine the subscription income for the year, where I started by saying you will feed in all the information of subscription in the subscriptions account. Feed in all the information in this account. Accordingly, there will be a balancing figure, which I'm now saying will be the subscription income for the year. I started by saying if you have any members who have not paid due their subscriptions by the beginning, that's an amount you are demanding from them. We call it subscriptions in arrears. Bring it down by the beginning. If there are some members who have not paid due by the end of the year also, that was by the beginning. And I told you it's an asset. An asset is always a debit balance. If there are some others who have also not paid us by the end of the year, meaning we are demanding from them, that's an asset also to us. So if there are any subscriptions at the end of the year, that is a subscriptions carried down. I've told you it's an asset, but you cannot have a brought down without a carry down. You carry down first on the credit side as a carry down. Then I've told you, what if by the beginning of the year, there are some members who had overpaid? By the end of last year, they had overpaid. Meaning by the end of last year, you owed them that much. They could come and demand from you. So you owe them. That's what we were calling subscriptions received in advance. It's a liability. I told you a liability is always a credit balance. Bring it down by the beginning. That's not a problem. Why are we bringing it down by the beginning? Because I've always told you it was carried down last year. So if it's a carried down last year, beginning this year, you just bring it down. But if there are some subscriptions that members have paid for next year, not this year, next year, it means by end of this year, we owe them. We have a liability to them. They can come back and demand for their money before the year ends. So we owe them. So if there are any subscriptions we have received in advance at the end of this year, that being a liability is always a credit balance. We have said you cannot have a brought down on the credit side without a carry down. That's what we have carried down. Good. Then we have said, find out from the cash book, if it's given, or from the question, how much did we receive as subscriptions during the year? Whatever we must have received, we must have debited cash or bank. We must credit subscriptions. If there is any subscriptions we have refunded out of that money, to refund, you can't credit again. To refund, you must debit. So you come and debit any subscriptions refunded to members. Then I have told you, if there's any subscriptions to be written off, whatever the question will tell you or whatever language it will tell you, it can give you a direct amount or it can give you a language you have to calculate the amount to be written off. Either way, whatever you're writing it off, you credit. Then I've told you there will be a balancing figure in this account. That balancing figure is what becomes the income for the year to go where? To go to the income and expenditure account. That's important to understand that account. Then the second type of income, donation, either general or specific. How to treat it, we have discussed it. General donations, take it to the P&L account. Specific, don't take to the P&L account, take it to a specific fund account. If it's a bus we are buying, call it bus fund account. Number 3, life membership, where a member pays a given lump sum for a long period of time. So you keep transferring from that life membership to the income and expenditure, part of the amount for the year, part of the amount for the year. Whatever is not earned, we shall earn it in future. Take it to the balance sheet as a liability. Okay, that's number 2. Number 3. Number 4, another source of income we have mentioned is what? Any profit from trading activity. What have we said? Any trading activity you are undertaking as a club or as an non-profit making organization, you have to prepare an income statement for it or a statement of profit or loss to determine the net profit. That net profit, you determine it as normal. Take the sales, minus cost of sales, get the GP, minus expenses, get the net profit. Take that net profit to the income and expenditure account. Number 5, incomes from investments. We have said e.g. dividends received or interest received. Finally, any profit from social activities or events like e.g. selling raffle tickets. Are you there? Good. So maybe for today we can stop there. Next time we now do a past paper question for this topic now. We now do a past paper question for this topic. Maybe for today we can stop there. We pick it up from there next time.